Jacob, TVC News, Lagos.
All right, thank you so much for that. And my guest is Mr. Muktar Mohammed. He joins me for more on this conversation. CEO, Finance with Muktar, investment banker, stockbroker. Mr. Mohammed, Happy New Year to you, and thank you so much for joining the news.
Thank you, Tolu. Happy New Year.
Yes, I think the market is starting so much in top gear, looking at the performance of the market. Let me allow you to take us through what you make of this performance, stellar performance, we must say.
Yes, Tolu, like I said in your program a while ago when we were discussing the stock market, I said in the month of November, you always see those slowdown in the stock market. Then in the month of December, towards the half year of December, you see a gradual recovery, and then you see the bull takes over in January. This is not unusual because, again, we have entered the earnings seasons, and you see a lot of investors, some are keen off for capital appreciation, some are keen off for dividend payout. So, and with the performance of the market last year, with the bullish sentiment based on the economy indices, that the market will definitely may perform better than what we saw last year. So a lot of investors are excited about it. And so they are looking at it as a way of also edging against inflation. Because whether you like it or not, the stock market was able to beat inflation, whether you call it rebase inflation or the real inflation, whatever you call it, the stock market gave like 50%, over 50%, like what your colleagues said during the, talking about the market. So definitely, I'm excited about the year, what will happen to the market. The 100 trillion excitement, yes, from the presidency is a call for excitement because even in the United States, even President Trump is campaigning that they should look at the stock market, what the stock market has done. So it's good that we are seeing the presidency talking about the stock market. We shouldn't forget that the stock market has come from contributing just 25% to the GDP to about 50%. And if we follow that to this year end, the stock market, if we get those listings that we are expecting, will be contributing about 70% to the GDP. So it's a sector that the government definitely will be very, very interested in. And Tolu, the good news about this 100 trillion naira mark is that it's not driven by new listing.
Yeah.
It's not even driven by some of the rights that have not been listed. It's actually driven by capital appreciation through fundamentals and value investment.
Interesting stuff. So moving forward, we need to, of course, leverage on this positive. What are your expectations? We know that we have an act now in the market that, of course, is also to, enable the market, strengthen the market and all of that. What would you say should be done for us to, of course, continue to improve? Because the president, like in his words, he said, this is just the beginning. A lot of investments will still expected to come in.
I'm happy the president said so. I'm happy the president is seeing the capital market as one of those vehicles that can drive investment into the market, the nation. We've seen stability in our FX rate despite low oil output. This is largely driven by Euro bonds, which definitely is like a market-driven bond in terms of the interest we give. That has helped our reserve. Then foreign portfolio investors have come into the market through the capital market, have come into Nigeria through the capital market. So I'm excited that the president knows that. We expect a lot of policy, but we have what I call it, not a draconian policy, but the policy that the market is calling that the government should address urgently, the capital gain tax. Up to this moment, the minister have said that they've held the tax implementation committee have also met. The stock exchange, the Nigerian Exchange Group have given their recommendation to the government, the Security and Exchange Commission. I think government should let us know as soon as possible what is the way forward. Are we paying the 30% capital gain tax, or it has been reduced? And what is the reduction? And who are those people that will benefit? Are we going to move the threshold from 150 million to 500? Are we going to see other incentives to encourage long-term investment, like it's done in developed nations, to pay lesser tax, to drive growth into the market? Those are part of the policy that we are expecting from the from the government to make sure we sustain these bullish runs. We need to know what the direction of the government is as regard the capital gain tax. The minister came and said he have heard us. We are still waiting to hear from the minister also, and also from the tax implementation committee. For me, that is the only danger that we see in the market at this moment, and I think that danger can be averted with government stepping in. You cannot tell a child that was born 9 months. After 9 months, you say the child should start running. No investor is saying he doesn't want to pay taxes, but he's saying those taxes should be investment friendly. If you look at the data from the Nigerian Exchange Group, you realize that a lot of foreign investors are exiting Nigeria, and some of them are sitting on the fence, waiting for government to come up with that clear-cut policy decision. If that decision comes and it is positive, that decision will help bring our naira not just to 1,400, but to even to a lower exchange rate with the dollar.
Thank you so very much, Mr. Muktar Mohammed, the CEO, Finance with Muktar, investment banker and stockbroker.
Thank you, Tulu.
All right, away from our shores now, Asian stocks drifted lower and the dollar firmed ahead of a crucial jobs report, while investors graded for a Supreme Court ruling on the legality of President Donald Trump's sweeping global tariffs that jolted markets last year. Simmering geopolitical tensions across the globe boosted oil prices as well as defense stocks and will remain in traders' mind as they weigh development in Venezuela. For now, traders remain reluctant to place bets ahead of the market-moving events. MSCI's broadest index of Asian Pacific shares outside of Japan swung between gains and losses and down 0.2%, just below the record high it hit earlier in the week. European stock features rose 0.34%. Japan's Nikkei soared 1.5%, buoyed by strong earnings and forecasts from fast retailing, the operators of the Yunko clothing brand. The S&P 500 climbed 0.01% to end the session. Nasdaq declined 0.44%. Dow Jones Industrial Average rose 0.55%. VDA slid 2.2%. Broadcom declined 3.2%. Microsoft dipped 1.1%. The S&P 500 Technology Index lost 1.5%, leaving it down about 1% so far in 2026. They grew more finicky about AI-related stocks whose valuations have been inflated by outsized gains in recent years.